Welcome to The Explainer. Today we're tackling something that, well, let's be honest, can feel pretty overwhelming, your health insurance policy. We're going to jump in and decode all that complex language so you know exactly what you're signed up for.
I mean, let's be real for a second, right? When you open that policy document, it feels like it's written in another language. All that dense legal text can be super intimidating. But what if you had a decoder ring for all that jargon? Well, that's what we're going to build today.
All right, so here's how we're going to break it all down. First, we'll talk about your policy and the control you have. Then we'll follow the money. After that, we'll get into the rules of coverage, figure out how to juggle multiple plans, and finally, what happens when other people are involved in a claim.
Okay, let's jump right into part one, your policy, your control. This is all about understanding your rights as the person who actually owns the policy. So here's the most important thing to get right off the bat. You are in the driver's seat. Seriously. This isn't just some document that controls you, it's your contract. And a huge part of that control is the right to decide where the money goes, whether the insurance company pays you directly or sends the check straight to your doctor's office.
This brings us to a kind of legal-sounding term, but it's pretty simple. Assignment. It just means transferring your rights. And an absolute assignment? Well, that's the whole shebang. You're handing over 100% of the policy to someone else. They become the new owner, period.
But, it's not an all-or-nothing deal. There's also something called a collateral assignment. Think of this as a partial transfer. You're not giving away the whole policy, just some of the rights. This is often used to secure a loan, and it just goes to show how much flexibility you really have. Now let's switch gears a bit and talk about beneficiaries. This is so important. If your policy has a death benefit, like some accidental death plans do, you have to name a beneficiary. Why? Because if you don't, that money gets tangled up in your estate, which means lawyers, courts, and a long, frustrating wait for your loved ones.
And you can get really specific here. You can set up a whole chain of command, right? You've got your primary beneficiary, who's first in line. If they can't receive it, it goes to the secondary. And if they can't, it goes to the tertiary. Your estate is really just the absolute last resort if no one you named is left.
All right, on to everyone's favorite subject, money. Section 2 is all about following the money, how it goes in as premiums and how it comes out as benefits. When it comes to paying your premiums, you've got choices. But here's the deal. Convenience comes at a price. Paying monthly might feel easier on your cash flow, but it's actually the most expensive way to do it over the course of a year. If you can swing it, paying annually saves you the most cash.
So, when it's time for the insurance company to pay you, how does that work? It all boils down to this one core idea called indemnity. Basically, insurance isn't like winning the lottery. Its job is to put you back where you were financially before the loss happened. It's all about making you whole, not making you rich.
And this idea of indemnity plays out differently depending on the type of policy. For example, with the disability plan, making you whole means giving you a regular check to replace your lost income. But for a medical plan, it means paying the specific bill from the hospital or your doctor. Okay, that makes sense. Now let's build on that and get into the nitty-gritty. The rules of coverage. We're talking about the limits on your benefits and what happens after you actually use them.
This is a big one. A lot of people think that if you file a claim, your total coverage amount goes down. But that's not how it works. Making a claim for one thing doesn't drain the pot for the next thing. Now, there's usually a lifetime maximum, but your benefits are there for each separate illness or injury.
And there's actually a name for this concept, the restoration of benefits provision. It basically says that just because they paid out for one loss, it doesn't reduce what's available for the next one. Your benefits essentially reset, which is huge for your peace of mind.
All right, let's talk about a situation that's pretty common these days, juggling multiple plans. What happens when, say, both you and your spouse have health insurance through your jobs? How do the insurance companies figure out who pays?
The key rule here is called the Coordination of Benefits, or COB. And it all goes back to that idea of indemnity we talked about. You can't profit from being sick. So, across all your plans combined, you can't be reimbursed for more than 100% of the actual medical bills.
So how do they decide who pays first? It's actually a pretty straightforward pecking order. For you, your own employer's plan is always primary. Same for your spouse. Theirs is primary for them. Now for the kids, it gets interesting. It's called the birthday rule. Whichever parent's birthday comes first in the calendar year, their plan is primary for the kids.
Things get a little different when Medicare gets involved, especially for folks over 65 who are still working. The deciding factor? The size of your company. If your employer has 20 or more employees, your work plan is primary. If it's a smaller shop with less than 20, then Medicare takes the lead.
Okay, for our last section, let's explore a different kind of scenario. What happens when your injury or illness was caused by someone else? Think a car accident that wasn't your fault. Who's on the hook for the bills? This is where another one of those fancy legal words comes in. Subrogation. It sounds complicated, but here's an easy way to think about it. It gives your insurance company the right to step into your shoes and go after the person who caused the damage to get its money back.
And honestly, this whole process is a huge benefit for you. Here's why. A loss happens, and boom, your insurer pays your medical bills right away. You aren't stuck waiting for some long, drawn-out court case to finish. Then, your insurance company handles the legal fight. They do all the heavy lifting.
So when you boil it all down, subrogation is really about fairness. It means you get your money fast when you need it. It keeps people from double dipping, getting paid by their insurer and the at-fault person for the same bill. And it allows the insurance system to work by holding the right people accountable.
So there you have it. Now that you have the decoder ring for your policy, you've got the power. From understanding who's in control to knowing how benefits are coordinated. So go on, pull out your policy. Which one of these provisions are you going to look up first? I bet what you find will be pretty interesting.